Dollar drop today, or are the bulls going to be saving it? Hello Adrian, and welcome back to another episode of the Dang Oracle. It's 7:30 p.m. UTC plus 8 is my time zone, and welcome everybody around the world who is watching once again. We are Monday. This is a beautiful Monday. Start of the week. Well, I guess start of the week is a big thing. We already started very early last night. At least I did. So hope everybody is doing well. Everybody is ready and awake and ready to go. Let's say hello first to the hardcore crew who is always joining us. 1 second. Oh, hi Monkol, hi Darren, hi Lex, hi Nikolai, hi Sied. Welcome to this episode once again. Before everybody is coming in, hi Jerson, hi Michael, hi Fardine, hi Cedric. Welcome, welcome guys. We have quite a lot to be going through. So let's go with some COVID numbers first while everybody is joining in. So for the US, we are at over 2.5 million cases. Brazil is over 1.3 million. Russia over 600,000. India is going up really fast as well, over 500,000. Let's see how it looks on the chart. Yes, the real Dang Oracle, or the little Dang Oracle, is probably going to be here very soon, because it's his sleeping time. So anyways, total coronavirus cases, we are at over 10 million now, 10,154,000 to be exact. Hi Marius. And let's take a look. Yeah, still not good. COVID on Brazil, Russia. Brazil is now the number 2, as you can see. India, Peru, and Chile. Yep, everything is still looking pretty bad. Hi Tina, hi Henry. So yeah, first of all, wanted to thank everybody who is joining me today. There is a big announcement. We have crossed the 1,000 followers on the site right now. So yeah. I guess that's a milestone that should be celebrated a little bit. So just a little hand clap for the 1,000 people that are with us. Well, not really with us, but who are following the channel right now. Yes. Well, you know, longing the coronavirus case is same as longing the stock market, right? While we had the coronavirus, we had an epic reversal on the stock market. So it's pretty much the same, longing the stock market or longing the coronavirus. So as long as the coronavirus goes up, you can make sure stocks are keep gonna go up, maybe. Maybe. One BTC giveaway. Well, okay, Nikolai, I'm very happy that you are willing to do that. So guys, because I have reached 1,000 followers, Nikolai is going to give away 1 Bitcoin. Apparently, that's what he's suggesting in the live chat right now. So please contact him or send him PM for the how the competition will go, right, for the giveaway. Anyways. Let's go into our analysis for today. So first, I wanted to go over a little bit over the traditional markets first. So this is the weekly chart on Nasdaq, and as I've said, the weekly close candle was very bad, but I do expect us to have a little bounce when the markets would be opening, right? And that is basically what happened, but not really the most important thing. The most important thing is when the markets opened, that we break that body candle. So for the people who are more not as familiar with candlestick analysis, so whenever we get some sort of like a candle like this, but the next candle does not break the body, it is not it basically it does not show a reversal of the pattern. But this time we can clearly see that when the market opened, it did break down below this break of the candle. So yeah, I'm pretty confident to say, well, you never know, right? I mean, the market still is going to be doing what the market wants to do, but I'm pretty more confident to say that most likely in the traditional market we will have some sort of a reversal, and of course we cannot predict how big that reversal is going to be, but most likely there will be a reversal of the trend, at least for the short term, maybe the medium term, or maybe even the long term. That's not something we can really say, but by breaking this body candle towards the downside, it does make me a little bit more confident to say that most likely we will have a retracement over the week, right? Over the week. So on the daily, what can we see? As you know, we broke, we bounced off the EMA 21. That's one of the reasons why I said most likely we will have a small bounce when the markets are going to be opening. And as you can see right now, we went back up. And do we have the power to go a little bit higher? Well, yeah, a little bit, but as you can see right here, a lot of resistance already here at 9920, and more resistance at the 10k, of course, which is the hi Alvin, which is the psychological resistance, right? And of course, what we're looking at on the daily is do we close below the EMA 21 or the yellow line tomorrow on Nasdaq? Yes or no? That's basically what we will be looking at. Very similar what we can see on the S&P of course as well. Let's go to the weekly. So this is how we got the weekly. Very, very bad candle, as you can see. Broke down below the body, but bounced back up on the 10 simple moving average. And right now, basically very similar tomorrow. Waiting to see if we close the weekly below the next weekly, sorry, below the EMA 21, yes or no. And then very similar on the daily. We pushed down below the EMA 55 or the green line here, and then we bounced back up, but right now we sort of are getting rejected by the 200 simple moving average, or this red line here at 3017, right? We are smack at that level too. So let's see if we move a little bit up higher. That's probable, it's possible. I would say like this is the next target zone at 3040. That would most likely be the area. And then where do I think that this pullback is going to be happening? Well, I've showed it to you last time. There's a small gap here at the 283 level. 1 second, let me put it here. So between this point and this point here, there is a gap here on the SPY chart or the S&P chart. So that would mean 280, what's that, 295, sorry, 295 to 296, so around 2,960 basically on the S&P chart, right? So at least a drop towards that area is what I am expecting, which is also the simple the EMA 200. And then the next gap, there's another gap right here, beautiful gap here between, what is it, 286 to 291. So that would mean 2,860. So I expect a small bounce on this area, and then most likely we'll be filling all the way down towards 2,860, right, on the S&P. So that would mean I'll just put the box for the second gap here. That would mean this area here, 2000, yeah, this here, somewhere around here, that we would be retracing. Hi Val, good evening as well. So how does it look like on the short term? Let's go on the 4 hour. Yeah, 4 hour is looking, I guess some people could say that this sort of is like a small ascending triangle, maybe. Nah, it doesn't look good. No, it doesn't look good. But yeah, still below all major moving averages, and yeah, maybe we get a little bit up higher, but I feel quite confident that we will be going down. Konsat, I don't know if nobody would expect that. I mean, people seems to be always be living in inside of some sort of a bubble or something like that. When everybody, like, I don't know, when you're asking everybody that you know, obviously, who are your friends and who are interested in Bitcoin, most of them are bullish, right? So it gives you a skewed form of expectations or anything like that. So I wouldn't say no one would be expecting that. I mean, like I said, I am still bearish. I still expect expect the dump, and most likely it's going to be happening today or tomorrow, to be honest. But yeah, anyways, let's go into our Bitcoin analysis. What were we looking at? Confirmation below below the EMA on the daily, below the EMA 55, right? So as you can see here, below EMA 55, below EMA 55, and here we made that small bounce, but still below the EMA 55, and right now, of course, we are still below the EMA 55. Before I go to the daily, let's go first into the weekly. That's the most important thing, right? Let's go first into the weekly. Sorry, let's go from the top first. And the weekly actually didn't close that badly, right? If we can see here, this is the weekly candle. It turned into a doji, but it was still above the EMA 21. However, and above the 10 simple moving average, right? But we've talked about that already. The Stokes are looking, curling towards the downside. But as you can see here, right here, it is technically still holding above the EMA on the RSI. Doesn't look like it's going to be very strong. But more importantly, what I wanted to show was, of course, the 3-day candle close, and the 2-day candle close was yesterday as well. And as you can see here, so the 3-day candle close finally closed below the EMA 21, right? It closed below the Stokes are already down. It was like that for a while already, but finally it closed below the EMA 21. On the 2-day, it was already closed below the EMA 21. What we were looking for was, of course, does it close below the EMA 55? It did not close below the EMA 55. It bounced back up, but it was still below the EMA 21 as well. And as you understand, and then of course the daily, which is what we were showing, the daily is the third day that it was that it closed below the EMA 55, meaning, of course, the strength of the weekly is going to be very weak, because it's like a domino game, right? So the first domino stone covers the other one, then the other one, the other one, the other one, right? So right now, obviously, I'm still I'm still holding with my expectations. I still think that we will be dropping towards this green box here around the 8.550, 8.6k level towards the downside, and I stick with my thought with that as well. Is there still a probability? Is there still a chance that we have a small bounce? Yes, if we are looking on the short-term chart, as we can see yesterday, what I've spoken about. So yesterday we had this channel that we were forming, and as you can see, we did break out of this channel. And I draw the RSI, as you can see here, the RSI. I said if the RSI does break this red line, we would make a small bounce towards the upside, but it was not very long-lived. As you can see, we broke out and we touched this MA21 on the 4-hour chart, or you can actually see it better on the daily chart. We can see that we touched basically this green box, or the EMA 55, and then got rejected from it once again. So as you can see right now, what we are forming is some sort of what we could potentially say a bull flag, potentially, as I say, but I don't really believe it, but it's there, right? So it's possible. So something like this is that we potentially could be forming, right? And that could break towards the upside. If we make a measured move from this bull flag, we can actually say that if it breaks out from here, we could get back into this green box towards the upside here, which is around 9,280, something like that. So is there a chance that we can still push up from here towards, like I said, a small anemic bounce towards 9,280? Yes, it's still there. Is it likely? Well, the longer it takes, of course, the less likely it will become. So I still don't think it will happen. I do think, and definitely now, as we can see, RSI is starting to drop back below this red line, meaning that it's most likely a failed breakout attempt. I mean, at least that's my interpretation from it. So again, rejection here from on the daily, a rejection from the EMA 55, and also the green box basically that we have drawn here on the 4-hour chart. So how does the whole pattern look like? Well, this is what the pattern then looks like for me. It's more like something like this. let's put the line here like this, and then actually we can keep the other drawing as well, where we broke out from, like this. And let's move this magnet out. There. So yeah, still two ways, as you can see. So in the short term, very little difference. So either an anemic bounce towards this area and then break down, or we can actually just break down from here as well, which is still what I think is the more higher probability, to be honest. But like I said, the pattern has not really fully confirmed just yet, but this RSI is not showing any good stuff or anything like that. I know, Constant, you are always 100% sure, but I wouldn't say 100% sure. The market will always punish you when you think one way or the other. At what price would you sell your Bitcoin? Actually, I'm not thinking about selling, to be honest, Moncol. When it becomes really cheap, it's better to be just buying and holding. So that's your average entry price for your holding price of Bitcoin is as low as possible, right? And the rest of the Bitcoins, I'm just using it for trading. That's basically my whole thought. So I never sell except basically I'm selling, right? When I'm shorting, I'm selling, but I trade with it, not actually selling. And when the Bitcoin price goes to, like, let's say it goes to $3,000, then you should be buying, not selling, right? Anyways, so yeah. This is basically the pattern. I'm still waiting for one of the two things to be confirming, but right now, of course, it looks more that it's gonna be going down rather than up. But let's see. I'm not convinced just yet that the bulls are going to be giving up immediately just now. So maybe still another anemic bounce towards the upside, but then most likely towards the downside. Something else that we can see is hidden bearish divergence. And for the people, this is hidden bearish divergence, where the price is basically making a lower high, but the RSI is making a higher high, right? So we can see here the price is making a lower high. So from this point to this point, as you can see, I'll zoom it in a little bit so you can see it a little bit clearer. So the price makes a lower high, as you can see on the price, and on the RSI we can see that from that point here, from that point to this point, RSI is making a higher high, right? So it's very clear that we have hidden bearish divergence as well on top of that. So yeah, like I said, things are just not looking good, right? So we have hidden bearish divergence. We have break of our creating a lower low on our price, although it happened during the weekend, so there is some asterisk. The weekly still has not confirmed it just yet, but the 2-day and the 3-day is breaking the EMA 21, which is obviously very bad. And then one more thing that I can show you is the following. Well, basically next week we'll be knowing a lot of things, but I mean, next week is kind of late already, right? But what I've been talking about, the bullish for the bulls, is the following. I'm waiting for this basically to be making a bullish cross between the EMA 21 and the simple 50 moving average. And right now, as you can see, the EMA 21 is 8,629 and the simple moving average is 8,638. So the bullish cross has not happened yet. So I'm really curious. Well, next week we will know, right, if we get rejected or we don't get rejected from that bullish cross. So I'm very curious to see what will happen there. And other than that, we have in 2 days basically our monthly close as well. So let's go over the monthly. What are we looking for the monthly? Two things. First of all, I want to see in this indicator that I'm using, it's the accumulator or distribution with markers. If the slope of this one is going to be positive or not positive. I don't really care about if it's red or green or anything like that. I just want to know if the if it's distribution or accumulation. So if this has a positive slope, then it's most likely that next month is going to be a good month for Bitcoin as well. If this becomes a negative slope or goes down or goes sideways, that mostly will mean that we will have more distribution and and not a very good month for next month as well. So yeah, those are the things that I'm looking at aside from the price as well. And of course, do we break the 9,000 area, yes or no, on the chart for the monthly, I mean. So those are two things that that I'll be looking like. Okay, so those are like a couple of things that that we can see that the in terms of like long term and short term what we are looking at. So still not 100% convinced that we will immediately break from here, but the probabilities are, as we can see, the daily starts to be really bad. The 2-day starts to be really bad, and the 3-day starts to be really bad as well. The weekly just has not confirmed it just yet. So it's like a domino stone effect. So kind of I mean, the bulls have to be stepping in or else it's going to be just breaking. That's just how it is. For the people who watched the stream yesterday, I also showed a little bit about the heat map, right? And as you can see right now, I will show you the top. On the top, a lot of distribution, a lot of sell pressure here at the 9,500 area. So if we do get a bounce, as you can see, we most likely, there's very little sell pressure, a little bit here at 9,300 and then at 9,400, but mostly at 9,500. So we could get a push towards the 9,500. I still think it's unlikely, but it's possible there. But as you can see, in terms of like support on the bottom, as you can see here, 8,550 to 8,500 is really where the action is at, right? It's really where the action is at. So a lot of support down there, which is also the reason why it makes sense that we drop towards that green box here first, right? And then make for me, I think, an anemic bounce as well from that area as well before we crash down lower. Because like I said, the HVP and the formation that we have been making for the past 2 months is a huge formation, and that just has to be concluded. And that's just how it works. We will most likely see a big drop, but of course with bounces along the way. But the first drop that I'm seeing is towards that 8,500 8,550 ish area. What do I expect? Well, Syed, I just explained that there's two things that I'm looking. So accumulation or distribution, and if we close below or above 9K for the monthly candle. But yeah, I don't think we don't have to wait very long, right? In 2 days we will know. How much stock do I put in lengthening candle cycle and stock to flow? Well, stock to flow is quite an interesting theory, but I think it's flawed for one particular reason. And it actually goes back into the calculation of the halving. So we had 3 halvings by now, and everybody is just basically in calculating that every halving is the same, right? We had the halving, and then it mooned. We had the halving, and then it mooned. But the third one is, I think, it's completely different halving, a completely different structure, a completely different landscape as well. So that's the reason why I think that using a theory like stock to flow is a little bit skewed. Do I think that it is a valid? Most likely it is, but I think there are some, some changes that has to be incorporated, and I think that the cycles or the length of the cycle is most likely longer than that most people think. So there's that. but it kind of makes sense if you think about it. So I'm not against the stock to flow or anything like that. I really hope that it comes through because then Bitcoins becomes very, very valuable. Well, valuable, that's another discussion, right? So I've explained this also before. Bitcoin might go to $100,000, but if you cannot do much with your $100,000 because of hyperinflation, then Bitcoin is not valuable at all. So we have to be a little bit careful with all these nominal numbers, right? All these numbers. I don't think that DeFi will cause FOMO, Mongol. I don't think it will cause FOMO at all, to be honest. Because well, we can have a stream about that, but it's more it's quite more intricate. The reason why DeFi is doing really well is because of two reasons. That's yield farming and liquidity mining. So that's the reason why DeFi is doing really, really well. So people are staking it to get high yield, or they're using liquidity mining to push and pump their prices for the DeFi projects. I'm not saying it is bad or anything like that. I'm just saying that the expectations by doing that is creating very high expectations, and people are miscalculating actually a lot of the yield when it is misleading, right? So short term, it looks really, really good when you have yield farming, but to be honest, in the long term, yield farming does most likely not. It's not sustainable. Let's put it like that. It's not sustainable. Yeah, let it. You're right. It sort of looks like a Ponzi scheme. It's not technically. It's not a Ponzi scheme, but yeah, it's. All I'm saying is like. Those are the two reasons that that DeFi is doing really well and getting a lot of hype and attention, but I don't think it's sustainable. So if you're asking me if that is going to be causing the FOMO in the same way as in 2017, no. I'm pretty confident to say that, well, at least that's my opinion, right? That's my personal opinion. I don't think that will cause the FOMO similar like in 2017. To be honest, I don't think we will have a 2017 or this altcoin moon party like in 2017 ever again. That's, I think people, I mean, that probably was a once in a lifetime event, and a lot of people will not like hearing that, but I think that's the case. I think that's a one in a lifetime event. But like I said, that's just my personal opinion. Things can go different very, very, very quickly as well. And oh yeah, I forgot to actually, I immediately went into the technical analysis, and I actually forgot that it's Monday, and usually Monday I go through some articles before we got into the technical analysis, but I'll save it then for tomorrow, because yeah, I'm already on a roll on this technical analysis, right? So one thing that I wanted to show you guys also today is the usage of the MACD, right? So a lot of people, well, most of you people all know what the MACD indicator is and what it does, but I'll show you a way on that maybe you guys don't have a I mean, I'm just saying maybe this is one of the ways that you have never seen the MACD being used before. So I'll remove some of the stuff. I'll just remove the histogram. I'll just use the MACD by itself in the blue line, basically. 1 second. Okay, this is correct. This is correct. This is correct. Okay, and then as you can see, wait, I'll move this one to the left side. There, and as you can see, we have a zero line here. So I'll make a horizontal line here at the zero line. 1 second. I'll try to make it at the zero line. It's too high. Fuck. FML. Nope. It doesn't want to. Anyways, just look at this line as basically the zero line, right? So let's make it a little bit better, like this. Okay, and okay. Still not zero. Okay, here 0.4. That's the best I can do right now. Anyways, whenever we have the MACD that is above the zero line, usually that's a good period. And whenever the momentum at least is doing well, and whenever we have the MACD below the oh, there we go. We have it exactly at zero now. Below the oh, why is it moving? God damn it. Okay, I'll delete this one first and I'll make it again.
You have 1,000 followers.
Yes. And this, yeah. So whenever the blue line is below the green line, it's usually a bad thing. Okay, so I wanted to show you guys this. So right now, as you can see, it is below the green line right now. So the momentum is definitely not with the bulls, right? So one of the reasons why I was kind of bullish before was that when we bounced off here, as we can see, we broke above the green line, then we bounced off of this green line, and then we had a high momentum towards the upside. That was on the 15th of April, and if we are looking at the price on that day, as you can see here, 15th of April. Sorry, here 15th of April, as you can see here, we made a break out of this bearish trend. We made that bounce towards the downside, and then we made a solid bounce towards the upside. Thanks, MJ, but it's correct. I think it's okay now. It's okay now. But yeah, you're right. Anyways, so yeah, and this is what I actually wanted to have happen, or thought it would happen as well. So it bounced down towards this green line, made it bounce back up, but instead of this, what we're seeing towards the upside, it broke towards the downside. And that was basically where I was quite bullish, as you remember, when we broke the 9,700-ish, 9,800, sorry, 9,800. It was near 9,800 at that point, right? So I was thinking, yes, we're gonna break up, and then, but too bad it went back down. And yeah, that's the way that you can also use the MACD. And as you can see here, the price broke down here below the green line, and as you can see, very big dump towards the downside. It broke up here, and very high pump towards the upside. It broke down here, and as you can see here, down very quickly. And basically this is more important. As you can see here, when it's just hovering against this line, the price also kind of like ranges into a long period, and then basically after that period, we can actually, by just looking at the MACD, we can see if it was accumulation or distribution, right? Because here we had a very long time that we were sideways movement, and we can see it here also on the MACD. But then what happened, basically it broke down towards the downside here. As you can see, it went down, and then we can see a major crash into the price as well. Very similar patterns we can also see here. It was hovering against the line, and then breaking down, hovering against the price, and then price breaks down. So another example that we can see, boom, 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 boom. Is there another beautiful example? Here, this is one, and where it breaks up, where, so you can see here, it was a very long accumulation here, very long accumulation, and then MACD shows basically uptrend, and then we basically broke up and went towards the upside. So by just using the MACD, we can actually see more the momentum and more the structure of what is possibly a accumulation or a distribution. Here, once again, as you can see here, very long sideways movement, and then it broke down towards the downside, and as you can see, price broke down. So that was distribution and not accumulation, right? So MACD is actually quite good, and that's how I'm actually more using the MACD than how other people are just using the histogram or divergences or something like that. For me, it's more important, is the momentum on the upside or momentum on the downside, or do we bounce off the zero line basically? And this is one of the reasons why I'm also still bearish, because, well, as you can see, we are breaking. Instead of bouncing up, we broke down below the zero line as well. Doesn't mean that we cannot go back up. Of course we can. Of course we can. But as you can see, right now things are just more towards the bears than the bulls, right? That's also what the MACD is telling us, right? I think yesterday somebody was also speaking about the GBTC chart. So let's take a look and of the between the GBTC and Bitcoin. Oh. So let's just overlay it a little bit, and as you can see, let's make it a little bit prettier. Boom, 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 boom. Yeah, so as you can see, so when people are telling, well, Grayscale is buying a ton of Bitcoin and blah, 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 well, we can see it in the price action price of GBTC as well, right? And as you can see, the red line is the GBTC's line, and it is going down way lower than the Bitcoin price. And as you can see, if we make a trend line right here, from this low to this low where we are at right now, sorry, we can see that the price is doing something like this, while on the GBTC chart, the price is doing something like this. So on the GBTC chart, oh, sorry if if you hear some crying on the back, that's the little dang oracle that is crying. But yeah, as you can see right now, the grayscale, if Grayscale is it has always been like a leading indicator. It hasn't been like that for a little while, but yeah, but it's usually it was like that. Let's put it like that. 1 second. Okay. he stopped crying with having the pacifier. But as you can see, so the price of GBTC already broke down, while the price of the spot price or the Bitcoin price did not break down just yet. So if GBTC is some indication, a break is most likely coming as well towards the downsides for Bitcoin. So those are actually all the, I've given like a ton of criterias right now already, why I do think that we will be more likely to be breaking towards the downside rather than the upside. But like I said, nothing is confirmed just yet. Something bullish, as I'm still waiting for this to become a buy signal on the hash ribbons, because usually the hash ribbons have never been really wrong. Whenever we get a buy signal, we do get a pump eventually or immediately. So I'm still waiting for this to turn into a buy signal. It hasn't done that just yet, but it's positive. So at one point it should be going into positive, except if we are making a big dump towards the downside, of course, then things are not going to be good. Thanks, lovely Jut. I just hope that actually I get more people to be joining in and talking and contributing and forming a community rather than monetizing or anything like that. Don't really care about that, to be honest. But yeah, having more people join in and have the same interest and having different opinions always makes you more grounded and always improves. There are always things that other people see that you, I mean, having more eyes on the chart is always better than just 2 eyes, right? But other than that, yeah, don't really care about anything else. Let's take a look on the CME chart. Boom. And on the CME chart, yeah, this is what I'm seeing right now. It looks like some triangle that we are forming right here, and yeah, it just, like I said, there's a chance that we still make a bounce towards the upside here, like 9.2k ish area, and then break down. But yeah, it just doesn't look very good. That's basically what I'm thinking. So let's wrap it up so that I can check if everything is okay with the little one. Let's wrap it up. What am I expecting? Well, two things, still the same two things that basically what we were looking at yesterday. If you were watching, we have a measured move here from this one to this one, so towards this green box, towards the upside, or you can do the same thing actually by just making a bull flag right from this area. Oh, that's a little bit too long. Bull flag from this line here, something like this, and then breaking out something like this, similar to like the 9.3k area, a retest of this bearish cross basically here, the depth cross between the EMA 55 and the EMA 200. Do we touch that line? I don't think we'll be reaching that high, to be honest, but crazier things have happened before. But other than that, if we make a measure moves towards the downside, it's the same as what we have done yesterday. We will be getting towards this downside, towards this downside here, towards this green box, towards the downside here. So pretty much very much same as what we've gone through yesterday. Only thing that was different is we have just more and more confirmation that the momentum is shifting towards the downside rather than the upside. Maybe take a quick look at the expected moves, because we haven't done that. Expected moves. What is expected saying? First standard deviation to the top side is 9,189, and first standard deviation to the downside is 8,976. So yeah, that would not break any of our structures or anything like that, so it doesn't help us that much. The only thing that is confirming right here, and that is quite interesting, is that the 12-hour Stokes are trying to curl towards the upside. So and we have a flash on the HVP, so that's quite interesting as well. But on the daily, the Stokes are still curling towards the downside. But however, we are on some sort of like a bounce, as you can see, a support zone of the Stokes. So maybe we will get a bounce towards the upside. So maybe. Yeah, RSI is still down on the downside. 4-hour Stokes are actually starting to curl towards the downside. So yeah, I'm more inclined that we won't be seeing that we won't be seeing that much action towards the upside. I'm more inclined for that, although the RSI is still above the EMA right now. So we still have to wait until it crosses down below 9,050. So yeah, how can we confirm anything? I would say a 4-hour candle close below the 9K area. That would most likely seal the deal, and then we'll most likely be breaking towards the downside. If we break towards the above, we close a candle, 4-hour candle above the green box here around 9,000, let's say 9,150, 9,180 or something like that. Then most likely we will have another test, a small test towards the 9,300-ish area. If we get very, very strong, and above all that, we can rethink about the 9,500 or just going through the heat map, as you can see right here, this area here. But there's a lot of sell orders, as you can see here, around the 9.5. So I just, it's very doubtful that we will get that high, but crazier things have happened before. Major support here, as you can see, at 8,500 or 8,550. So I'll still stick with that idea. I still stick that we will have that drop of $500 towards the downside rather than the upside. Probabilities are just higher, and it's confirming on basically on an everyday basis. And maybe tomorrow we will see if it finally breaks yes or no, and then we have the monthly close, so that will be quite interesting as well. So nothing really changed for me in terms of like pricing, just more confirmation and more data that is showing that momentum is weakening, and the bears are actually getting more and more control. And eventually, like I said, eventually, and definitely that's what the MACD is also showing, eventually it most likely will be breaking towards the downside rather than the upside. So yeah, that's it. Thank you for joining with me once again for today. I hope to see you again, same time, same place tomorrow, 7:30 p.m. UTC plus 8. Please like, share, comment, and whatever you want to do with this channel. And until tomorrow, please